Caroline Hyde. This is Bloomberg Technology, and we're live from Boston this week, showcasing the innovation, diversity, and power of the regional tech economy. We're coming to you from Boston's Institute of Contemporary Art today, completely beautiful, and we'll be live from various tech center locations in Boston throughout the week. Now, coming up in the next hour, investor and Celtics co-owner Steve Paliuca joins the show. We'll get his input on Bain Capital's portfolio and, of course, the current NBA season. Plus, President Trump threw a lifeline to ZTE, the Chinese telecom company on the brink of failure after being banned from buying US parts. We'll discuss the next steps. And we'll hear from Tom Layton, CEO of Boston-based Akamai, how the plans to stay ahead in the competitive space of cloud and data security. But first, to our top story that we've been covering all day on Bloomberg. The US Supreme Court struck down a federal law that has barred single-game gambling in most of the country, giving states leeway to legalize gambling on individual sporting events. Now, the decision was no doubt have a huge impact on the professional leagues in the US. So let's bring in our first guest to weigh in, Steve Paliuca, Bain Capital co-chairman and, of course, co-owner of the Boston Celtics. And I've got to get your take on this landmark ruling. Is it a good thing for sports?
Well, my understanding is the ruling is actually focused on states' rights more than anything else. So we'll see how that plays out. They have gambling all over the rest of the nations, and as you know, in the UK, soccer gambling. So I think it'll play out as a states' rights ruling. Something that Massachusetts should approach? That's up to the state. You know, the Attorney General is great here, and I'm sure they'll figure out what the best way to handle it is. Interestingly, we've already been hearing from the NBA Commissioner, Adam Silver. We know that he's been a relative supporter, but saying overall we've got to ensure that the legitimacy of the sport is remains intact. But do you think that it would affect the game in any way? I think with Adam Silver as commissioner, the game has always had a high integrity with David Stern, and Adam Silver is their highest priority. And it will remain so whether anything changes in gambling or not. People want to see a fair game, and they do an incredible job at putting that on. Would you like to see the NBA take a cut of the gambling? You know, again, that's up to Adam Silver and the group. We're really focused on trying to win a championship with the Boston Celtics, and we're really enjoying what's going on right now. Let's talk about that. Yesterday, the win. It's all I heard as I got the train down from New York was the focus on phenomenal performance against the Cavaliers. I mean, what does this mean for you for the rest of the season? Well, it's only one game, but we're very proud of the team. Obviously, when you have two of the top players go out with injuries, many teams fold. Brad Stevens and the team pulled together, and a young team really has stepped up. It's a fantastic kind of Cinderella story. So I love watching it every night, and they're competing very hard. They're playing as a team, and it's wonderful to watch. What does it mean for your brand, for the franchise? Well, the franchise has been very strong before we purchased it. It's an iconic franchise. It's really more, we feel like we're stewarding the asset for Boston and Massachusetts and all of New England. And this story makes it even stronger. You know, young players coming in, looking at those 17 banners up there, one of which was on our watch, really inspires them. We have a fantastic coach, a fantastic general manager, Wick Grosbeck, you know, I think the best CEO in sports, and co-owner. So things are looking really good right now. We knock on wood or glass and are hoping for the best every night. LeBron is, you know, transcendent player, and you can never count LeBron out. This was one game, but it was off to a great start. Let's talk about stewarding assets closer to home. Let's talk about the investment side of your focus, and particularly when it comes to cyber, chips, software. You're in it when it's at Bain Capital. Where are you seeing the most value at the moment? Because we do see price points at a very lofty level across any industry group right now. Absolutely. I think any industry group price points are high, and they're especially high in tech. So we've done over 150 tech deals through bad cycles, good cycles. We've done chip deals. And the key is really focusing on where we can transform a company and really fundamentally change its trajectory. That can outweigh the ups and downs of pricing, and that can allow you to buy companies in these kind of frothy markets. So, for example, buying two companies at once and putting them together and getting synergy. Trying to grow a company through multiple acquisitions, trying to grow a company through going exporting rather than just selling domestically. So we try to be very disciplined in these markets, and so far that's been successful. Our funds have done well. But I would say our word right now is to be disciplined and kind of stick to our knitting, to use our folks. And we were really founded as a group that can help management teams develop strategies and grow companies. And we're just going back to those roots even stronger in each vertical market that we have.
How does the environment affect you in terms of, at the moment we're all talking about data, about privacy, about the way in which maybe companies monetize that. How does that affect the way that you then look at assets, and particularly in the internet and software space?
Well, it's certainly an issue with any internet company that collects data. And if you take one step back, almost every business is a tech business now. Yeah. The technology in this period, I've been doing this for 30 years, and this period has kind of revolutionized, or at least evolutionized, every business that we're looking at. We actually spent an entire day with our global partner group meeting with the Gartner Group to discuss technology trends and how they affect industrial, how they affect banking, how they affect technology companies, how they affect consumer companies, and the game has changed. So every investment you do, you need to factor that in. In terms of the privacy issue, that's an important point as well. I think the companies are responding in a good way to kind of ring fence that in. The positive of having data is, for example, I like getting customized ads for the things that I like.
Yeah.
So if you can do that in a responsible way, which I think companies are trying to do right now, and work with the government to do that, I think that'll be good for everybody.
Let's talk about the government and how that also affects the way in which you invest. I mean, there's assets that you've looked at in China in particular. When you have these sorts of geopolitical risks or trade skirmishes, how does that affect your willingness to do business in a country like China, for example?
Well, we've been very successful in Asia and China in general, and we think the long-term view is it's a great developing market. We think China is coming towards the world economies and not going against it. They are implementing more rules that are favorable for investment. And so we're hopeful that the ongoing discussions will result in even a better climate. But you certainly have to weigh that in, and you have to pick your spots on where you think you can be successful and not successful. So we have a great on-the-field team in China who understands all that, and we've been successful because of that. The
spots that you can be successful. Where are the spots that you can be successful right now when you're sat here in Boston, when you're looking at opportunities? Where's exciting you?
Well, in Boston in general, about 40% of the people in Boston are involved somehow in innovation. We've been very fortunate that we're at the hub of innovation. You see things going on at Harvard Building and Engineering School. Companies here, we have a company, VM Turbo, that's really growing very rapidly through our venture fund. So we're looking at all things of how the internet affects companies, how you can add value there. So certainly technology is a hot and growing area from a venture perspective and from a buyout perspective. But what you have to factor in is, what do you have to pay for these companies? So I could tell you hot spots here and hot spots there, but if you're paying too much, you're not going to make a return. So we again try to take that disciplined approach where we find a company that can be transformative, really reduce costs for a company, give them better marketing materials, whatever, and then we invest in those companies to build them and grow them to kind of be immune to the valuation issues right now.
How difficult when you have such juggernauts come into the space, particularly in venture, for example, SoftBank's Vision Fund, $100 billion to put to work. Do you feel that they're disciplined themselves? Are they what's driving the frothiness, or is it something else?
Well, I think in general the economies of the world are doing well. We've come out of the crisis in 2008. The banks are totally stabilized in the United States. Every restaurant you go in is full. Every plane you go on is full, as you know, traveling around. So we're in a pretty good situation on the face of it economically, globally. So SoftBank is an issue. It's really not for us. Our venture funds are smaller. They can be more selective. SoftBank is trying to make very large bets on companies that are going to try to gain share globally. So it doesn't affect us as much per se. What really affects us is, in general, there's a lot of money, chasing deals. And so I come back to our theme song, which we'll say over and over again, is to be disciplined and to stick to do what we know, which we've been doing for 30 years, finding companies that can grow, take share, and become larger.
Do you look at the economies as they grow? Do you think interest rates changing, could that affect the frothiness? Could we start to see assets pulling back in terms of valuation? I
think we will see a pullback if interest rates go up dramatically. I don't foresee interest rates. No one can predict interest rates, but if you look at the situations in most of the world economies and governments, there's a lot of debt out there in the governments themselves. So, for example, our national debt is $20 trillion now. I think when I came out of business school, it was $1 trillion. If interest rates went back to the levels of 5.5%, that's $1 trillion onto the deficit. So I don't think many governments can afford to have high interest rates. So I would see a prudent approach would be raising them very slowly and hopefully that'll mitigate a large pullback. But when they go up, inevitably, valuations go down.
Interestingly, you've just launched a real estate team, I understand. How's that affected by interest rates going up slowly or indeed dramatically? What's the focus there?
It's really the same issue. Real estates are more stable assets. We've had a great team come over to Bain Capital from Harvard, who's been a top performer for the last 10 years. It worked out great for both sides. We're very excited about that team. And again, they're going to be selective. They stick to specific niches that they know about. So, for example, funding biotech office space, doctor office space, things that have demand and will last the test of time and maybe withstand some of these interest rate increases.
Excited about teams at Bain and excited about certainly teams called Celtic. It's wonderful to have you here.
Been very fortunate. I don't think we've ever had a better team at Bain, and certainly this Celtics team is just working magic every night, and hopefully the magic will continue.
I'm sure everyone in Boston is hoping so. Steve Pagliuca, thank you so much for being with us once again.
Great to be
is
here.
Steve Pagliuca is Bain Capital co-chair and co-owner of the Boston Celtics. Now, drama among management at Tesla continues. CEO Elon Musk announced a thorough reorganization among management in a memo to employees Monday. He added that Tesla was changing its structure to improve communication, combine functions, and get rid of activities that aren't vital to the success of the company's mission. Now, the news comes after several executives announced their departure in recent months. Coming up, much more from the Institute of Contemporary Art right here in Boston. We'll speak with the museum's chief curator and discuss how art has evolved through technology. And if you like Bloomberg News, check us out on the radio. You can listen on the Bloomberg Radio app, Bloomberg.com, and in the US on Sirius XM. This is Bloomberg. Welcome back to Bloomberg Technology in Boston. We are at the Institute of Contemporary Art, one of the most prominent modern art museums in the US. And the ICA was founded in 1936, and in 2006, so it opened its new impressive building right here on Boston's waterfront. And ICA's chief curator joins us now, Ava Rispini. Wonderful to have you here in what a beautiful setting, so thank you for hosting us.
And you brought the good weather. Thanks for having me.
I'd like to take the credit, but I'm not sure I do as a Brit. But let's talk about also what you're hosting here in terms of the final week or so of a perfect thing to be talking about on a technology show. It is The Art in the Age of the Internet, 1989 to today. What can we see at this particular exhibition? How has technology changed art and vice versa?
Well, with this exhibition, you'll see that technology has profoundly changed art. And the argument that we're making with the exhibition is that technology has changed all of art. So it's changed painting, it's changed sculpture, photography, not only technologically oriented mediums, but the oldest mediums of all have been changed by the internet. And really what we're trying to explore with this exhibition, which has over 60 artists and over 70 artworks, so it is really a large survey, is that we're looking at the internet as a set of social relationships. If we think about how the internet has changed every aspect of our lives, how we date, how we shop, how we travel, how we make friends, how we see ourselves, how we vote, how we understand the truth. So by that logic, it has also changed contemporary art, fundamentally, how artists think and how they see and how they produce. So what you'll see on view here is all the ways in which this technology of the internet internet, the ways in which the internet has changed our society, has also changed art making, whether it's painting or video or sculpture or virtual reality.
It's interesting that you say how technology has changed the way, well, we date, but how we vote, how we interact with each other, how we see ourselves. Not always for the best. But has art been made for the best through technology changes?
No, I would say no. What you see upstairs is really varied ways in which artists are reflecting on how technology has changed us as a culture and as a society and how we see ourselves. And I would say there's a tension with a lot of the work that you see in the galleries. There's some artists who speak to the kind of utopic possibilities of the internet when it was first invented, the idea of universal connectivity, the idea that information, images could be shared and accessed by all. And then I think what you see now is a deep suspicion of the internet. This idea that perhaps we're in these echo chambers that are just speaking to our own worldviews. And there are artists in the show who speak to that deep suspicion of the internet. The idea that the technologies of the internet have really shaped how we understand ourselves, how we relate to each other in ways that maybe aren't always for the best. And in fact, quite a few people have commented on the kind of dark nature of many of the works on view. And I would say we live in really divisive times. And so artists, I think what they can do is hold a mirror up to our culture and our society, and that's what you see upstairs, artists that are grappling with exactly this issue.
I mean, your timing couldn't be better in the terms of the Facebook Cambridge Analytica scandal, in terms of data coming in March. I mean, were artists telling you about this concern almost ahead of the charge, and what made you bring it to the ICA now?
Well, I think absolutely artists do that, and it goes back even further than that. We have, for example, a section of the exhibition that's about surveillance and a threat to privacy, something that, of course, we're all thinking about. But artists have been thinking about this for a long time. We have a work from 1994 that's essentially a kind of nanny cam, and it's a sculpture that has a capacity to surveil. We have a work from 1992 that does the same thing. It's a large eyeball that tracks you in the gallery as you walk around as a kind of visual reminder of Big Brother. Think about that, 1992. That technology today, it's very easy to do, but at the time, these were artists who were really pushing the envelope. So while the kind of cultural context and technologies might have changed over time in the last 5, 10, 15 years, certainly they've changed a lot. I would say some of the concerns that we see in this show are universal. Ideas about a threat to privacy, ideas about how images and information circulate today. These are ideas that artists have been thinking about for a long time.
Well, your timing is very apt, Ava. We thank you for having our time here as well in this beautiful setting. That, of course, was the ICA Chief Curator, Ava Raspini, joining us there about their current exhibition. Now, coming up, President Trump is looking to save jobs, only this time they're in China. What that means for ZTE next. This is Bloomberg. Welcome back to a special edition of Bloomberg Technology, live from Boston's Institute of Contemporary Art. Now, President Trump has made bringing back jobs a focal point of his platform, only now, well, he wants to help Chinese companies save jobs. On Sunday, the president tweeted that he's working with Chinese President Xi Jinping to try and get China's #2 telecom company, that's ZTE, back in business after it ceased all major operations. Let's go to Bloomberg's Emily Chang, who is standing by in San Francisco. And Emily, talk to us about the state of the ban on ZTE. I mean, are we seeing any possible easing right now?
Caroline, this is really a stunning reversal in the rhetoric, at least, that we are hearing from President Trump and this administration. Suddenly, he's concerned about jobs in China. Let's go back over that tweet that he sent out on Sunday. President Xi of China and I are working together to give massive Chinese phone company ZTE a way to get back into business fast. Too many jobs in China lost. Commerce Department has been instructed to get it done. Then Monday, the president tweeting, ZTE, the large Chinese phone company, buys a big percentage of individual parts from U.S. companies. This is also reflective of the larger trade deal we are negotiating with China and my personal relationship with President Xi. So some context here. The United States has imposed a 7-year ban on ZTE for violating sanctions having to do with Iran and North Korea, and then reportedly lying about it. There are several U.S. chip companies and software companies that sell to ZTE. ZTE uses these U.S. parts to make their phones, to make their cell phone towers. So this certainly is sending a signal about the broader implications for the trade tensions happening now between the U.S. and China. However, condemnation from lawmakers on both sides of the aisle. There's concern that President Trump could be backing down from some of his tough talk. Here's a tweet from Republican Senator Marco Rubio saying, "Problem with CTE isn't jobs and trade, it is national security and espionage. Any telecom firm in China can be forced to act as tool of Chinese espionage without any court order or any other review process. We are crazy to allow them to operate in the United States without tighter restrictions." Now, of course, a lot remains to be seen here. The White House this morning sort of walked back these tweets from the president, saying that it is, in fact, up to the Commerce Department. So many more conversations are going to be happening this week with respect to this ZTE case in particular.
Yeah, plenty of tweets, plenty of talk. We understand that a delegation is coming from China this week, in fact, as soon as tomorrow, right, to Washington.
Right. So President Xi Jinping is sending his top economic aide as well as their commerce minister. They're going to be talking with Treasury Secretary Steven Mnuchin, which, as we understand, it's Treasury Secretary Mnuchin and his more moderate views that may be influencing the president right now. Also, Commerce Secretary Wilbur Ross. Take a listen to what he had to say earlier today.
ZTE did do some inappropriate things. They've admitted to that. The question is, are there alternative remedies to the one that we had originally put forward? And that's the area we will be exploring very, very promptly.
Now, Secretary Ross did emphasize that this ZTE case is specific to ZTE, shouldn't be taken as any signal of broader implications for the looming trade war. That said, the Chinese government is now fast-tracking its review of the Qualcomm NXP deal. They had stalled that process, and of course, this is a big deal to Qualcomm, which is a U.S. company. So it seems that on both sides, we're seeing some sort of compromise, some sort of giving in that really could signal that this trade war and these trade tensions, Caroline, could be going in a different direction.
And hopeful, therefore, Qualcomm for its deal with the NXP potentially. But also, what about Qualcomm's relationship with ZTE? Because it was a major supplier, and that was what was hurting ZTE so much.
Yes, Qualcomm, a major supplier to ZTE. This ban definitely not good for Qualcomm, and the fact that this fast-tracking of the review process in China could be good for Qualcomm. So we have two things today now working in Qualcomm's favor.
Bloomberg's Emily Chang breaking it all down for us. Thank you very much indeed, live from San Francisco. Now, coming up, we survey the Boston tech scene some more with one of the investors who's funding it. Our conversation with John Auerbach of CRV. This is Bloomberg. This is a special edition of Bloomberg Technology, live from Boston's Institute of Contemporary Art. I'm Caroline Hyde. And all week long, we're looking at the best that Boston's burgeoning tech hub has to offer. Our next guest, well, is helping to get the tech startups here off the ground. John Auerbach is the partner at CRV, a firm that has been providing capital to early-stage companies for nearly half a century now. Among those investments, Twitter, the Flatiron School, Patreon, Udacity, and many more. And they've just closed their 17th fund to the tune of $600 million. John, welcome to Bloomberg Technology.
Thanks for having me, Caroline.
What are you spending $600 million on?
We just closed a new fund. It's our, as you mentioned, our 17th, and we might be the first firm in the country to raise a 17th fund. And what that means is there's a lot of history there.
Yeah.
We've always been early stage technology investors. That's always been our sweet spot. And we've been lucky enough, and I do mean lucky, in order to be involved with some of the companies you mentioned. Also, we're expanding our mandate slightly this time, and we will pursue some selective growth investing as the companies get a little bit more mature.
Why do you say lucky? Don't you make your own luck?
Most venture capitalists believe that they're differentiated in 14 different ways: smarter, faster, better. And we have 48 years of data, and that data shows us that we're actually not very differentiated. That at the end of the day, a lot of what we do is luck. Now, you create your own luck. It has to be through hard work and networks, and most importantly, having the credibility among the tech entrepreneurs, who are the ones who are really doing the hard work.
How much of those entrepreneurs are based right here in Boston? I mean, you split your time between here and Silicon Valley. What are you seeing in terms of breakup between the tech talents?
They're very different markets. I think a fair way of looking at it was that in the 1990s, Boston was having its technology heyday. And that's because Boston understood how to tie computers together. And in the 1990s, we were plumbing out the internet. Then the internet got built out, the bubble burst, and Silicon Valley and San Francisco really stepped in as the people who knew what to build on top of that internet. So Boston is a very different market. It's a much lower volume market. However, because of all that history, there is a very small group of incredibly talented entrepreneurs. We've got a company here called Drift, which is in the software as a service space, that is one of the fastest growing SaaS companies we've ever seen. And it's from a 5-time entrepreneur who grew up in the 1990s during the Boston heyday.
5-time entrepreneur. What have his exits been like? Do you see these entrepreneurs wanting to go for IPOs? Are they selling out? Are they? What do you tend to see as the strategy at the moment?
In some ways, entrepreneurship is an affliction. It's something that remains in your system for life, and it really doesn't matter the size of the exit for the type of person who just wants to create something that's going to change the world. In this case, the CEO is a gentleman called David Cancel, and he is an extremely talented entrepreneur who realized that there's a big market development that he can go exploit and build something. And Drift is fundamentally changing the way that customers can talk to the companies that sell them products. It's all about cutting out the middleman. Uber is about cutting out the middleman. Airbnb is about cutting out the middleman, and so is Drift.
Let's talk about Airbnb, because it was the purchaser of one of the companies that you helped back originally, Pencil Labs. They bought them a few years ago, the scheduling app that they were building. We're looking now at regulation that doesn't always help some of these companies cutting out the middlemen, because the middlemen get cross. And we're seeing here in Boston, Mayor Marty Walsh looking at perhaps making it slightly harder to be renting through Airbnb. Are they appropriate regulations that he's taking on board?
I think they're appropriate for a politician who needs to be elected. Okay. And at the end of the day, Marty Walsh, who's been a tremendous mayor for the city, is looking out for housing stock. So he specifically targeted investor-owned units. Now, I would point out that many of the other units outside of Airbnb are also investor-owned. And I think that this is part of an inexorable march towards technology, creating marketplaces where most of us would agree that our lives are better because of Airbnb, not worse.
Talk about that march in terms of the progression of companies such as Airbnb. There is an awful lot of private money, such as yours, that goes on to fund these companies to be phenomenally valuable, $30 billion. We know that the CFO has just exited from Airbnb, and they're not going to be IPOing anytime soon, or at least not this year. Are they waiting too long, or is it appropriate?
I think the Sarbanes-Oxley period had many CEOs very concerned about whether it made sense to go public, whether they wanted to be public company CEOs. And we sense that that's changing, that people are realizing that in order to be a successful leader of a company, they need to create shareholder value. They need to have liquidity for the employees, first and foremost. And that's why I think you're seeing more openness. I think most companies that can go public and feel as though they will trade well as public companies can and should.
Some of the vast amounts of cash coming into these sorts of companies are coming from enormous funds being raised. We look at, I brought it up earlier in the show, the Vision Fund, SoftBank's $100 billion fund. What does that do to your marketplace? Are they good because they're exits for you, or does it warp valuations?
To be determined. In our case, SoftBank has invested significant amounts of capital in several of our companies, and you could say that from a capital raising perspective, that's good. I think the whole world doesn't know whether they will be friend or foe in the long term, and whether they are aligned with the CEOs of the company in order to create that shareholder value in the best possible place for employees to work.
One of the companies you also helped fund and then sold off was Flatiron School, has been bought by WeWork, and WeWork is one of those companies that took a big chunk of change from SoftBank.
That they did.
What do you think of WeWork and the direction it's going? Because Flatiron School is, of course, all about education, but WeWork seems to be getting into marketing services, into, well, accommodation rental as well. Is it trying to do too much for too many?
I think they've got a very bold and powerful management team that sees a world in a far different way, and that's what makes a great entrepreneur. Obviously, we don't know whether they will be successful in each of these areas, but I think it's very natural that they expand beyond their core office rental into core areas like learning, which is incredibly powerful.
What about learning in general? What about the industry you used to come from? You came from this industry. You were a media man. You're at the Boston Globe. You're a Wall Street Journal. What's the media missing right now when it comes to the tech scene, to developments?
A profitable business model, first and foremost, I think.
And how would you change that? What does the media industry need to do to change?
I think there are some bright hopes out there of getting rid of the printing presses, unfortunately, and right-sizing organizations, because there continue to be thousands and tens of thousands of talented journalism students who come out with a point of view, and they want to change the world, and they have the right values and the right backgrounds, and that there ought to be platforms across the world to accommodate those people. Unfortunately, that there's just an anchor around the neck of most media organizations, which is just a cost structure that's completely out of whack.
Who's doing it right?
I think if you look at Politico, they've right-sized an organization. You're also seeing some early signs of subscription commerce really starting to pick up. People, at the end of the day, people will be willing to pay for great content. Look at HBO. They're a creator of great content. People pay for it. And I think in the media world, long-form journalism has a place in this world, and people will pay for it.
What about data? Should companies be paying for data? Should we be being paid for our data?
We are definitely in the fourth industrial revolution, and that is a revolution all about data. If the third industrial revolution was the onset of the computers after World War II, right now everything is about data, and data is power. We've also seen how it can be a corrupting force. But at the end of the day, I think natural economics will take effect here, and that data will be good for all of us. We're all creating data. We're all measuring data. I measure it on both wrists, and it's powerful for all of us.
Give us some data to chew over now. Where should we be looking for? Where should we be excited about? Where's the next? Where are you getting into in terms of the fourth industrial revolution?
Sure. I think these last 10 years, the iPhone was released in July of 2007, and that began a 10-year push towards mobile. And a lot of that was about apps and UI and UX and design and swipe left and swipe right, which had a tremendous impact on the world. I think the story of hope is these next 10 years will be about very hard technologies. Artificial intelligence, NLP, NLU, all of these buzzwords that you hear. But at the end of the day, look at a place like healthcare, which is finally realizing that when you let computers enter the equation, not as a foe, but as a partner, you can more accurately diagnose dermatological conditions, breast cancers, cardiological conditions. So I think these next 10 years are going to be about partnering with computers as they learn and help, as opposed to just using the computer as something that helps us complete a task.
Ending on hope. I like that, John. Thank you.
On a high note.
Great to have you with us again.
Nice to
It's
see
been
you.
great. John Auerbach, partner at CRV, joining us here in Boston. Now, meanwhile, Apple CEO Tim Cook gave the commencement address at his alma mater, Duke University. He didn't shy away from divisive political topics like gun control and immigration, and he took tech companies as well to task for not protecting users' data.
We reject the excuse that getting the most out of technology means trading away your right to privacy. So we choose a different path. Collecting as little of your data as possible, being thoughtful and respectful when it's in our care, because we know it belongs to you.
Tough talk. Coming up, Desktop Metal is manufacturing and selling 3D printers to various industries and putting its mark on Boston. We'll go behind the scenes with its CEO next. Plus, Akamai is powering the streaming world and keeping hackers at bay. We speak with the CEO, Tom Layton, next. This is Bloomberg. 3D printing is still in its infancy, but could disrupt the $12 trillion global manufacturing industry. HP, 3D Systems, and smaller startups are quietly revolutionizing the technology for mass production of medical devices, consumer products, and auto manufacturing. Bloomberg's Anne Mostew visited Massachusetts-based startup Desktop Metal that prints products in stainless steel and other metals, and recently bought the Ford Motor as a strategic investor.
Desktop Metal is making 3D metal printers in 2 sizes.
This is the DM Studio system. It's the first machine that lets you print metal parts in an office. Literally, you roll this in, fits through any door, plug it in.
And there's a larger one for mass production.
It starts around $500,000 and it goes up to several million depending on the configuration.
CEO Rick Fulop explains it's the same inkjet technology that other 3D printing machines use, but faster and cheaper than welding or melting metal with lasers.
In the laser system, this part would be $80. This part is $4 with our process.
The goal is to make 3D printing scalable on the production line for various industries.
This technology can be applied for everything from stainless steel to titanium. It's very suitable to automotive, it's suitable to heavy duty, it's suitable to making valves, it's suitable to airplane parts, high-end consumer electronics. There are many, many applications for this type of technology.
3D printing has long been a novel technology in search of a huge market. And according to Wohlers Associates, production applications for 3D printing could eventually grab at least 5% of the worldwide manufacturing economy and translate into $640 billion in annual sales. Other companies are taking notice. HP and 3D Systems are making the shift.
It's been around for 20, 25 years, and the reality is that today, it was all prototyping. So the bulk of it was prototyping, and for the first time, the next 20 years is going to be about end-use part production.
Desktop Metal counts BMW and Caterpillar as customers. The company has raised $277 million with backing from GE Ventures, Lowe's, BMW, Alphabet's venture arm GV, and most recently, Ford.
Clearly, automotive is a great market for our technology and probably will be the largest market for this type of technology.
Desktop Metal employs 150 people, mostly engineers. Along with R&D, this latest funding round will go toward increasing that staff and reach, with plans to extend to more markets, including Europe and Asia. Anne Mostew, Bloomberg, Boston.
Now, in the wake of the Cambridge Analytica data scandal, Facebook has suspended 200 apps that may have also leaked private data. You may recall that CEO Mark Zuckerberg promised an examination of all its apps in late March. Now, the 200 apps are suspended pending an investigation into whether they did, in fact, misuse data. Now, coming up, we speak to the CEO of Akamai about keeping the internet secure. That's next. This is Bloomberg. Welcome back to a special edition of Bloomberg Technology, live from Boston's Institute of Contemporary Art. Now, companies are spending more and more to protect their online systems from distributed denial of service attacks. In fact, that spending is expected to jump 22% to $1.2 billion in 2018. And one of the leaders in that space, it's Akamai. CEO and co-founder Tom Layton joins us now. And we were just talking about how, really, is that the growth area of the business for you now, cybersecurity, the protection part?
Cybersecurity is now about a quarter of our revenue, and it grew 36% in Q1 year over year. So fantastic growth engine for Akamai.
The demand, where is it really coming from?
All major enterprises are subject to denial of service attack, account takeovers, and fraud. You know, one of the world's largest banks just told us they implemented our new technology to stop the account hackers. They were losing 8,000 bank accounts a month to hackers, just taking it over and stealing the money. And they turned on the Akamai service, and now it's down to just 1 or 2. So basically stopping account takeover and fraud at the bank.
That's financial services. Are you seeing this completely broad-based in terms of industry, or are there particular industries that are coming to you?
Obviously, the banks are, really care about that, but commerce companies, airlines for reservations. We just had an example with one of the world's leading apparel makers, and they had a special new apparel they were selling online. And the bot armies come in and buy up the entire inventory so they can sell it later for more on the gray market. We also see this with popular shows or sporting events, concerts. The bots come in and buy everything, and then they jack up the prices. And now we can stop that. And so we'll filter out the 99% of the traffic that's the bots, so the humans can actually buy the shoes or the tickets online.
How are you staying ahead of the curve in this?
Innovation.
Yeah.
You got to have technology that knows how you move the device in your hand when you're doing it, how you tap. If you tap, do you get the right response in the device? So the whole profile of how a human, their neuromuscular interactions work with a device online. And that becomes hard for the bots, which are computers, to emulate in a way that we can't, so we can detect it when the bots are doing it.
How do you make sure that you're on top of innovation? Is it people?
Yes, people with really creative ideas. And also we have fabulous amounts of data. So a lot of the world's transactions, if not the majority, go across our platform. And so we can see how humans do it versus how bots do it. And by analyzing that in a clever way, we can tell, well, is that a human? Is that a bot? If it's a bot, what kind of bot is it? And then do the right thing.
You're privy to plenty of data. How do you take that responsibility, considering we're in a time that everyone is looking at privacy of that data and security?
Very, very seriously. We are in a unique position that, a large fraction of the banking transactions, commerce transactions go over our platform. We don't use that for advertising in any way. We don't sell that data in any way. We are very careful to protect it. In some cases, it has to stay within country borders. And we really use it only for traffic management and for security. So that we can keep bad people from doing things that we don't want to have happen.
Did you ever think about monetizing that data?
Sure.
Or was it, and what stops you?
Because it's just not the right thing to do. That data is owned by our customers and by the end users. And I don't think it's appropriate for us to use it for other purposes, like, for example, advertising or some of the things you see happening now.
So do you think some other business models that have been grown up are inappropriate?
I think it's a challenging and interesting time, and society has got to figure out what is the appropriate use of data. Ultimately, it's owned by the users, and so there's obviously a lot of important debate taking place now.
Do you think regulation is the answer to that debate?
Regulation's always complicated, a two-edged sword that sometimes maybe it can help, but sometimes there's, unanticipated consequences. So you have to be careful with that.
Talk to us about the other part of the business where it grew. Was the web traffic is the area that has been coming under some issues because your clients have been building their own tools. But however, we've started to see a resurgence again. Revenue was picking up in particular. What's driving that revenue pickup? Because it doesn't seem to be the big internet players.
Yeah, so revenue overall grew 11%, driven a lot by security, but we are very pleased to see our media business grow by 6% year over year. And that's traffic growth. We increased our share. There's more video online. It's at higher quality levels, and that means there's more traffic to watch a high-quality video. Seeing some real uptick on a global basis. Just did the world's largest sporting event ever, 7 million concurrent viewers for cricket. Which, of course, is very popular.
Closer to my home, yeah.
Yes, in India and other parts of the world. But, outdrew a lot of the events we have here. And then you think 7 million setting a record, that's a tiny number compared to what could happen as more and more video watching is done online.
And how do you stay ahead of that curve? Where's the innovation coming in that respect?
Yeah, again, capacity is really important. Quality is incredibly important, and that's really hard to do in countries like India, where there's not a lot of infrastructure. And there's a lot of innovation. How do you get high quality in scale when there's not the infrastructure that naturally does it? Had a cool project where we actually put servers in train stations so that people could watch on their mobile device even though they couldn't afford cellular, but they could watch the cricket matches because we were there close by for them.
And let's bring it close to home as we sit overlooking the port here in Boston. What does this city mean for your business, and how much is the innovation that we keep on talking about relevant to this area and crucial for it?
I think the Boston area is a fabulous place to start a company and grow a company. You have great universities. You know, to this day, our headquarters is 1 block from MIT's Computer Science and AI Lab, probably the best place in the world to start a company. And I think to grow a company, there's really great talent here, a great ecosystem. It's great to see what's happening with a lot of the startups and the incubation groups. And the giants companies are noticing that as they, start growing their presence here.
Fascinating, and I'm sure you'll keep on growing your presence as well. Thank you for being here with us. Of course, that was Tom Layton, CEO and co-founder of Akamai, joining us live here in Boston. And that does it for this particular edition of Bloomberg Technology. And we'll be continuing our coverage from Boston in tomorrow's show. We'll speak to Amazon's Tom Taylor, the CEO of Wayfair as well, and Massachusetts Governor Charlie Baker. But that's all for now from Boston. This is Bloomberg.